Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking metals, let's talk precious metals, let's talk gold. U.S. inflation data today. CPI came out this morning pretty much in check, up 0.2%, which is what was expected, up 1.8% year over year on the core, and up 2.2% rather, year over year on the headline, which was slightly hot. So this particular CPI shows gradual inflation, which is exactly what the Fed was looking for. Now that means that there's no incentive for the U.S. Federal Reserve to increase the pace of rate hikes, but it still means more rate hikes. So that's giving a little bit of a push to to gold, because gold is considered to be an inflation hedge. It's not really that good of an inflation hedge if you look at it historically, but it does trade that way. When there's inflation in the pipeline, gold tends to rally. We've got gold up about 0.5% on the day. There's also the US dollar, which has its third consecutive down day now, and it's been down 6 of 9 days, which again, if the Fed were going to be on a faster pace of tightening, you would see the dollar rallying, and it's not. It's 3 consecutive days down, 6 of 9 down. That shows you that the market doesn't believe that interest rates are going to adjust that much for this gradual inflation, and the inverse correlation with the dollar and commodities, including precious metals, is also giving a tiny bit of a boost to gold. But again, not much. We're only talking about 0.5% higher today on gold. And then lastly, in the geopolitical sphere, we had the ease of tensions between the U.S. and North Korea, with talks being agreed to. But Rex Tillerson, the well-respected Secretary of State, was fired today. He was ousted, whichever phrase you want to use, by President Donald Trump. Now, he was considered to be one of the higher-minded, more intelligent people in the Trump cabinet, and he's been let go to be replaced by the head of the CIA, Mike Pompeo. So we don't know what shape that's going to take. So that certainly is not putting pressure on gold to the downside. It's not necessarily a reason to buy gold, but it is, again, a little bit of sort of chaos, let's say, out of the White House. And anytime you see any sort of exaggerated governmental chaos, especially in the U.S., really anywhere in the world, but especially in the U.S., you should get a slight bid to gold. Again, Rex Tillerson, not a reason to buy gold, but gradual inflation and a weaker dollar is. This is Bob Iaccino talking about a higher gold contract from the CME Group trading floor in Chicago.